So we are going to take another look at Senseonics Holdings, as it's just insane what is currently happening, being up more than 100% again after pulling back from initial spikes at the beginning of the year. As we peaked right above $4 however, and are selling off more than 10% since the last video, what we are going to do today is give you an updated insight into what is happening to Senseonics stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. So in the case of Senseonics, we are looking at a medical technology company focused on providing implantable glucose monitoring systems or CGMs for people with diabetes. But what truly differentiates the company from its competitors is its progress on its commercialization of these devices, while appearing ready to target the multi-billion-dollar opportunity in the diabetes space. In particular, its Senseonics Eversense XL product is what most investors have their eye on right now. The main reason for the stock to be up so much in the first place, however, is the massive hype it currently experiences from retail traders and videos like this one talking about the potential of the company. And it's got literally all the things the other successful meme stocks had before breaking out. It is a single-digit stock with a small float of just 280 million shares, high short interest with 25% of that float sold short, and tons of retail attention. But, and this is crucial to consider for our prediction at the end of this video, this hype isn't the only important catalyst for the stock. As mentioned before, Essentia, another massive player in the area for example, has recently backed Senseonics with the goal of bringing Senseonics core products to a broader market. In addition to raising capital via convertible debt, this high-profile backer has provided significant validation to investors on the fence with the stock. Additionally, this also is a huge step towards long-term growth and profitability if this collaboration yields fruit. And there are a few very important reasons to know before buying the stock that could prove this assumption. But as an early-stage medical device company, Senseonics currently doesn't generate that much revenue. In fact, the company brought in less than $5 million in revenue in the last 12 months. However, this stock has garnered sufficient excitement to justify a $850 million market capitalization. Accordingly, something must be up for investors to be willing to put their money to work in the company at these levels, next to those who are in for the squeeze. So in early February, Senseonics announced the initiation of European commercialization activities for its CGM system. With the help of its partnership with Essentia, the company's looking to bring its products to market in Europe, a massive new opportunity with millions of new potential customers. And Essentia has had tremendous success in marketing its Contour CGM products in Europe. As mentioned, the fact that the Eversense product is approved in the US and is beginning commercialization efforts in the US and Europe is important. These markets are two of the crown jewels in the global diabetes device market. So if it gets received as positive as in the US, and with the massive hype from retail investors in mind, it looks very good for Senseonics stock. Nevertheless, it is certainly not cheap right now, and buying at this level is extremely risky. Execution risk remains high with the stock, and the company will need to continue to show results from its commercialization efforts. But there is certainly huge potential growth here in the company, and even going in for the short term, to profit from the short squeeze we've especially seen skyrocketing the price in January, could turn out very profitable. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.